Okay, hello everyone. So we will try in this panel basically to give value as much as possible. We will also allow people to give questions later on. I would like to start with a faster, short intro. Each one of you basically tell us what do you do and how are you related to crypto. Let's make it just short, to the point.
Okay, sure. I guess I'm starting. My name is Dennis. I am from San Francisco, California. I am an engineer by trade. For the past 5+ years, I've been in the technology field. Past 5 years, I worked as CSO, CIO for an IoT company. And personally, I do invest in crypto for the past 2-3 years. We have a crypto fund. Currently, 80% of my time is spent as a founder for a blockchain project, and 20% of my time is advising funds and also other crypto projects that I feel are very interesting, such as IoTW.
Cool. My name is Yasen, and currently I'm heading from a product and technical perspective all the initiatives in cryptocurrency in PaySafe Group. Heavily into engineering, engineering background again, as Dennis. Prior to PaySafe, I've been a CTO of the biggest peer-to-peer lending company into the Bitcoin space, and yeah, basically early investor and early adopter in Bitcoin and most of the cryptocurrencies, basically.
Hi everybody, my name is Massimo Schäppi. I'm investment associate and investor at iAngels and iCapital. iAngels is a venture capital firm based in Tel Aviv, Israel. Basically we're a hybrid of a premium equity crowdfunding platform and a VC because we allow accredited investors around the world to invest in early stage tech ventures with a focus on the Israeli market, where we focus on technologies such as cybersecurity, artificial intelligence, enterprise software, and most recently blockchain. In 2017, we started an offering, an asset management offering in the blockchain space, as well as an advisory offering. And in 2018, we launched iCapital, which is the subsidiary of iAngels, and which handles all the blockchain-related investments.
Yes, Pascal Forster. I met Sterling last night at dinner from Bitcoin.com.
Your mic is off.
Sorry?
Press the button to turn on.
Ah, sorry. Yeah. He approached me and said, "Yeah, you look like a legacy financial services guy." And I guess I see a few with gray hair like me, so I'm late. I'm a legacy guy, but I'm not a legacy financial services guy. I've been a headhunter for most of my life, recruited very senior roles for clients in Switzerland and in Germany. Became an angel investor about 5 years ago, and about 2 years ago I started with the first blockchain investment, which actually in Switzerland is not something you can miss. I have a lot of fun in the space. I started with the technology space first, and I got involved in the crypto about 1.5 years ago. Everything I do on the crypto space is really to bring the traditional investors into the space, to build the frameworks, to build it really solidly, because I believe in the technology. I believe we have fantastic years ahead. So I'm involved with the crypto fund. We're doing prime brokerage. We're trying to launch ETF. We're doing storage. I do the crypto finance conference, which you might heard of in St. Moritz just last week in San Francisco. That's for investors and institutional investors and high net individuals who are interested in the space. And also I'm invested into a ICO rating agency, fully independent, very academic ICO rating agency, which I think is also necessary if we want to move on in the space.
Okay, thank you everyone. So the first question is, since everyone is in the crypto space, what challenges are you facing currently or you faced?
I guess to start, as a blockchain founder, I think one of the biggest challenges is legal, right? It's like musical chairs. The laws change every month, and every lawyer or law firm will tell you different advice, and everything is different depending which country you choose to incorporate with. And it's not just the security law, but it's also the taxation laws as well. So it's a minefield out there. And from the United States, I know for sure that we have one of the strictest governments in the world when it comes to security laws and taxation laws. So I would say a lot of ICOs and their innovation and resources are extremely hampered by these legal challenges. And I would even go far and say a lot of the American projects are made very hard to be competitive with non-American projects simply because of all these challenges.
Are they actually moving from US?
Yes and no. Last year, a lot moved offshore. You're talking about things like Cayman Islands, BVI, Malta, Switzerland, Singapore. But now, I believe a lot are moving back in the States because how I foresee is people move if there's a value to move to justify all those complications getting those law firms, right? Back then in 2017, a lot of utility tokens were able to get a lot of great valuations, right? Folks in my circles, my funds, we enjoyed anywhere from 3x, 23x, 66x on certain returns. But right now with the bull market kind of coming to an end, we're in a recession at the same time with a lot of heavy regulation. The utility token is not performing as well. And I predict that as utility token performance comes down, there's going to be a rise in security tokens, and if there's really no benefit, why go through all these legal, loopholes and trying to figure out all these things to try to go offshore when you can just do a simple security token and then focus all your time on actually building tech. So I think that trend will continue.
Okay, we'll get back to security tokens later.
All right, so as Denis mentioned, of course, legal compliance and regulatory, it's both. It's probably like 80, not, but 70% of the problem. If you think about it, since I've been involved in crypto back in 2011, we've saw that how people were building businesses. Then they start centralizing everything, and they're like, oh well, then I need to start thinking about how I can interact with other businesses, how I can create an ecosystem, how we can share information, data, and then it comes the regulatory perspective of it. And that's a serious challenge which will come in the next few years, at least on my end. Technically, I don't think there's any challenge currently into the economy. It's just that people are starting a lot more new projects rather than focus on helping each other develop the idea which are already there and been there for a while.
Okay, thank you.
I would quickly like to elaborate on my introduction. We've been investing in currencies, in utility tokens, something I call commodity tokens, and equity in the space. And currently we have been reducing our exposure to liquid assets and increasing our exposure to equity investments. Now I would like to touch base on three key challenges. And also to give some more context, only this year we have been looking at over 350 ICOs, equity deals, and upcoming STOs. So we have seen quite some things, and we have a feeling of what is going on in the market and what will be come live next year in the first quarter, in the first half of 2019. Now, the first big challenge from an investment perspective is actually to differentiate between good ideas and good investments and good ideas but bad investments. The reason I say this is in this industry we have brilliant people, really amazing people. Yesterday I was at this dinner to have some drinks in this bar, and I met some of the speakers here as well, and we have really great people in the industry, which is a problem because we have a new asset class and great people who have amazing ideas. So how can we differentiate between good ideas, good investments, good ideas, bad investments? So to simplify this, imagine a graph where you have an x-axis and a y-axis. On the y-axis you have investments, the idea, and on the lower right it's bad, on the upper right it's good, and then on the x-axis you do have tokenomics. You have bad tokenomics, good tokenomics. So in this framework we do have like 4 fields. We do have good ideas, good investments, good ideas, bad investments, bad ideas, bad investments, and bad ideas and good investments. This doesn't exist. So it's really easy to spot the bad ideas, bad investments. I call these BB, GIGI, BG, and so on and so forth.
Wait, utility tokens, it's not an investment.
Actually,
you shouldn't say investment.
Actually, it really depends, right? I mean, if you have a utility token based on proof of stake, you can turn something in an income-generating asset. So, for example, I hope this is the case with Ethereum going forward, right?
In case of Ethereum, it's a utility, but there is
yes, it's a utility token.
There is a creation of demand based on the fees that people burn on the gas. So this is the demand where every user needs to buy more Ethereum because he's burning part of his holdings doing the transactions.
That's
but
true.
a lot of other utility tokens don't have such demand being created automatically, which basically end up to be a shitcoin.
My point is actually to be able to analyze these different, or this new asset class, you need to have a very good framework, a very good approach, and it's really difficult for retail investors to get in here without a lot of experience and to invest in different new token structures, right? So what we do at iAngels is we work together with a psychologist who is looking at the team. We're working together with economists who are looking at tokenomics. We're working together with finance professors who advise us, tech people, cybersecurity experts, and people who review the codes. So, and we do have an informational network where we basically reach out. We have the direct connection to the team, but also to other big funds, especially in Asia and the US. So we know what is going on. So my point here is with this challenge is that you need this informational network and know how to invest in the space. Definitely. And it's difficult. It's difficult to differentiate between geekies and geebies. Right?
Yep.
Okay. The second challenge, sorry for my long speech. The second challenge is the lack of alignment of interest. You have all these ICOs who come up with a great idea, then they publish their roadmaps, and the first thing they do is they want to raise $30 million. By the way, I've never ever met a startup who was able to tell me why they need $30 million. I was in Tel Aviv, great startups there, great technologies, equity deals. They have a product, they have blue chip clients, they have revenues, they are profitable. They raise 100,000, not 100,000, but you know, $1 million at a $6 million valuation. Why do you need $50 million? I don't know. However, and they don't want to invest, protect the investors, which is a big problem as well. And the third problem is fake news, which was also mentioned in a previous panel discussion. You need to have this network of people in this ecosystem so you can verify what information is true and what is not true. These are kind of the three big challenges that come to my mind from an investor's perspective.
Thank you.
I don't want to bore you with more of the same. I think in Switzerland we have set ourselves some really ambitious goal. We wanted to be the first real FINMA-approved fund. It all took way longer. I wanted to do 2 STOs this spring with 2 of the companies, spent endless hours with lawyers. We didn't find the hole to close the gap to make it fully equity-like, so we're working on the solution. I think overall, as you said, Massimo, this industry fascinates me because it just attracts the best talent, and particularly it attracts the best talent in Europe and in Israel. So we have the chance here, unlike in some other technologies, really to make a difference here in Europe. I expect this to take time on the technology side until the systems are fully scalable, on the framework side until basic regulators or governments fully understand it. So I think I personally look at it as the next peak in 2025. So I think blockchain will peak again in about 7 years. That might seem like a long time, but you're all young. I not so, but let's have fun together.
Okay, I'll move to the second question, and I will basically like to start from Pascal, so you will have more things to talk about. The $1 million question, what does it need to happen in order for us to reach, or for the crypto economy to reach a mass adoption? It's a big question, so.
So if we are in the space, we are driving at 180 miles an hour, we tend to look at the next scenery rather than look at it in the larger perspective. I believe blockchain is a key innovation, playing a major role in technological transformation. And if you look in history, you can actually learn a lot from old cycles, how adoption works. So basically, the potential of the technology has attracted bright talent. You all were attracted by by the potential of it, by the fantasies of it. You were smart people, or smart people joined the room. They were able to attract first investors. They invested in it. The first boom was created, but actually the first applications were really disappointing. That's where we are, fully normal. Investors then tend to go away for a couple of months. That's where they are. They focus in other stuff before they come back. Actually, in this conference, also in our conference in St. Moritz, we always put the regulatory guy to the slots towards the end of the conference, but actually I do believe they are key. They should have the first step, because if you're on a turning point like we are, it's all about the government joining in. You don't want to see the government as a problem. I know it's not so libertarian, but the government is going to be the solution. So I really encourage you all to take the time to, when you meet regulators, educate them really about the spot. I just read now that Christine Lagarde for the first time is going to speak on the subject in Singapore. We see now that the regulators take point of view. We tried to get them for St. Moritz in January. They all rejected us. Now we had in St. Moritz we had European people. That's going on. So the space is evolving. It's all normal. Stick to it. Work on it. Mass adoption will come because it's a fantastic technology.
Thank you.
I think mass adoption is already happening. I mean, look at all the big companies who use blockchain technology. I mean, they use private solutions and not public solutions or consortia, but they're in the game. You see IBM, you see these consortia, the Ethereum Enterprise Alliance, but you also see Line, you also see Rakuten, you also see Yahoo Finance, Bakkt, T0, all these companies getting into the space. So I think it already is happening. What needs to happen, or basically to refine the question, we need to ask, when will we have 1 billion users who use decentralized applications? And this will only happen once we do have better user interfaces and a better user experience. I mean, I had a look at all the decentralized apps, not all of them obviously, there are 1,890 I think, dApps on Ethereum, and I had a look at them. So most of them are decentralized exchanges, and the rest basically are games, gambling sites, and scams. This is what we have. And the exchanges are great. They have like 20 to 30, 40,000 users a week, which is amazing. And it's a great use case. I think actually it already is a killer use case. You can exchange value, exchange assets in a trustless way, cross-border. That's amazing. So I've used it a lot. But then you look at the gaming applications, and the user interface is terrible. There are like 2 big games, which is CryptoKitties and Ethereum. And I just had a look at this Ethereum recently, and you cannot do a lot. I don't say it's bad, because it's the usual way these technologies develop. You need to have games, because with games you can try them, you can poke them, you can see what they can do, you can find out what is this technology up to. So I think games are a good first step, but a lot more needs to happen, especially in the UX, UI space. Last but not least, there is one more thing which is really important for mass adoption in terms of digital assets and currencies. Is custody solutions. We need to have military-grade custody solutions in place, and I think this is something you are working on as well. Actually, existing solutions can be hacked, and I tell you this because I know people who hacked them, who told me that they hacked them in Israel. So we need better solutions.
Thank you.
I remember a story, like a very interesting story from what Massimo said, and what Pascal said. I've been in Amsterdam on a conference back in 2013. It was the first Bitcoin conference. It was massive, and I remember very clearly how I saw people saying, banks, right? Like, regulatory, like, we don't want those guys. And I was like, no, that's not happening. Like, this is not gonna work this way. Like, we need to embrace the banking industry, the regulatory, the regulators, basically all the compliance guys around the world in order for this to happen. Another, let's say, opinion is what we've been sharing with the guys from Boost VCs, that in order to have the mass adoption, you need to have 3 things. So first is shared KYC all over the ecosystem and crypto. The second one is shared payment methods and payment gateways which connect fiat to crypto. And the third one is there shouldn't be a guy which is asking the question, what was that crypto thing? Right. So I think those three things are very, very important. And if you think about it now with customers, with Coinbase having, for example, millions of customers, Bitstamp and other wallets, for example, Circle just started a stable coin, so they're getting more and more and more customers. They will get into a point where people will need to start sharing their identity to this. They will need to start sharing and sending money very, very quickly, very easily. So I think that will be the challenge which will be solved next.
I think Telegram is working on something like that. Telegram Passport.
Yeah.
Great.
Going on the Yasen's sentiment, I hate to be devil's advocate. I feel that there's still quite a long way off for mass adoption. Now, there are definitely a lot of noble attempts, right? But when earlier we were talking about how an ICO or a blockchain company have to go through all of these hoops just to even get started, and spend all their seed money before they even get started on legal and accounting, how in the world are they going to be able to scale, right? Second of all, one of the largest barriers is there's not enough talented engineers to scale all these thousands of blockchain companies, right? Yep. When it comes to investing, I know in the past there are a lot of companies that made a lot of money even though they may have a questionable team. But we see now in this recession and in the current state of blockchain where there's a lot more solid technology-based companies coming out. So a lot of investors, basically the dumb money has lost a lot of money, right? The smart money made a lot of money in the past couple of years. And right now, smart money, I mean, if you take a look at some of the statistics, in 2017, there are about $5 billion put into ICOs from crowdsource, like not funds, but crowdsource. This year, I believe that went up to around 7, but a lot more, there's about $500 million came in, actually no, billion rather. A lot more funds came in from the venture capital world. And this is smart money. I'm talking about highly educated people that run legitimate funds. I'm from Palo Alto, so that's an hour south of San Francisco. We have something called Sand Hill Road. If you go down there, every single fund, Sequoia, Lightspeed, these are big funds that actually build real companies with real technologies. Some of these funds, like Andreessen Horowitz, they just launched a $300 million fund. I was just at Stanford University the other day. We had a fireside chat with Doug Leone, one of the managing partners of Sequoia Capital. He mentioned an entire many decades of operations. Nobody ever leaves Sequoia, but one person did to start a crypto fund, right? So there's a lot more smart money coming in, and smart money usually do founder spend. They back solid technologies. So in order to get mass adoption, yes, there's a progress of things happening. You see IBM, big companies getting in, but there still needs to be regulatory certainty, especially with how KYCs and all these things work, to work within the current frame of things. The original community that is very, what should I say, like they're all against all for decentralization, anti-government, they want to be anarchists, and this is that type of rally won't work for mass adoption because we still live in this world where there's structure, there's laws, right? So one, there needs to be regulatory maturity in terms of understanding crypto. The government regulations and the regulators need to understand blockchain, and that needs to catch up all across the board. I know in the SEC in America, for example, they hire a lot of bright people. I know in Singapore, for instance, they work with a lot of the MAS, they work with a lot of smart people. In fact, there's rumors I hear Singapore is building their KYC blockchain to start regulating identities when it comes to ICO and these kind of things. On the other hand, there needs to be a lot more education to build up the workforce to understand the program and the code. I mean, there's the fact, if you take a look at some of the news and the statistics, a lot of people think, I mean, let's not talk about how many people can use DApps, right? Oh, CryptoKitties, all these kind of things. Let's take a look how many people actually use Ethereum, the chain itself. I mean, there's a statistic that came out, there's like couple hundred, couple thousand active users, small amount, and that's really shocking, and right? And a lot of this is not because there's no potential, it's just proof that there's no mass market adoption yet. And to pave the way to that, I believe big companies that have built solid, real businesses that already have mass user platforms will need to take their role in this. If you just look at history, when internet came out, and before all this cloud and SAS type apps, you had companies that had large user bases. They were the ones that were able to take a very complicated technology and make it go mainstream. So people like my mother, my grandma, they don't know anything about technology, they can use it, right? And then these companies will end up being the unicorns of that particular industry. In crypto, it's the same thing. Right? You have companies like Telegram, for instance, with 200 million users. They're positioned right now with a huge war chest to basically do M&As and buy out the best companies to execute and build a platform that actually may be a payment platform or an ICO platform. You know, that's a possibility, right? You need more of these coming in order to reach that critical mass. So as opposed, I do understand that in the very beginning of cryptocurrency and blockchain technology, it's like any random person, we don't even know who Satoshi is. A random guy could come on a white paper and create this mass movement. Yes, that dream is still there, but the reality is there needs to be also an emphasis on working with real founders, real technologists, real business development, build partnerships into making sure that this technology can work under the hood in existing cloud-based apps and cloud-based solutions. This is the only way where we'll reach more mass adoption.
Thank you. Any comments?
I still think we're in this phase where trading is 30x times more than like whatever any other activity would be happening in crypto, and I think like at least for the next 5 years will be so.
There is one thing that concerns me, which is that we always compare blockchain to the internet, and from the first use cases to mass adoption. The thing is that we now have Bitcoin and blockchain for, what, 10 years? And Bitcoin is still the only real killer application. So, and we do have the internet to work globally together, to collaborate, to interact, which we didn't have before. So we're still in a very early stage, even though we have these tools. Don't you think this is a bit concerning?
So from the perspective, or from the technological perspective, yes, because you know it should be a lot faster. Like the adoption should be happening a lot faster. Again, one of the main issues which I see is that just people keep restarting with new ideas and new ideas. Like if you think about it, there are 3 or 4 companies in crypto, while we started back in 2011, 2010, which are already more than 5 years old. Most of the companies and most of the projects are just like they start, they try to run for some time, they end and they restart with a new idea, which again for me it will be an issue. Like I think more people would be focused on infrastructure, on a lot less projects, and put it into a lot more mature stage prior to like keep pushing for new ideas for mass adoption from the consumer.
Cool. If I may, I want to add one more thing. I think infrastructure still has a way to go for mass adoption. I mean, in order for mass adoption, blockchain apps, blockchain technology must be competitive to cloud-based solutions or distributed solutions. There must be, beyond a shadow, they must prove that enterprise should use this technology more than legacy or cloud-based solutions. And to this date, you know, even though there's a lot of ventures into this world, you know, I know IBM, Oracle, JD.com, Alibaba, these big companies are looking into it, but it's still not there yet. And I'll give you an example just to highlight the intricacies on why it's such a daunting task. So for example, one of the things that one of the use cases that blockchain wants to solve for a very long time is decentralized file sharing, right? You have companies like Filecoin, SiaCoin that raise a lot of money to attempt to solve these issues, right? In theory, it is very easy to think, oh, I have some extra hard drive space and I can simply rent it out like Airbnb to my friends to use it.
Where is Filecoin today after 250 million?
They raised 250 million.
Where are they?
And where is it now? Where are they?
Almost
Where's the
20 years
product?
past.
Exactly, right? And that, I believe, is, there's a lot of intricacies that in the technology that weren't fully thought out. So for example, right, a lot of people that aren't technologists, especially the investors, got led into this dream. Probably have no idea that you can't just use a random hard drive space for different files. There are some hard drives, there are some storage solutions that are optimized for really large files, like videos. I know there are folks in here that are in the video business, right? I know some folks, and then there are some hard drives there, or the storage space that are optimized for small files, right? Like Amazon S3 was originally designed for large files. So you really need professionals to understand the intricacies and differences. And then, so how are you gonna control these things? You know, what if a specific device is offline? Are all my files stuck on that person's computer? I can get it. What redundancies are there? What error solutions are there, right? So it's actually heavily complicated. And the biggest issue that most people don't even talk about today, I mean, I hear talk about what's the fastest transaction per second, or TPS, right? What is the best consensus? Proof of work? No. Proof of stake? No. I invent my own proof, right? All of these things are debated. But have people thought about, in a decentralized world, you have nodes, you have computers pretty much spread all over the world. The latency or the speed of trying to ping every computer is going to be slower. You can't, usually, most cases, it can't be faster in cloud computing. So how do you solve that issue? You need people thinking 3 steps ahead to understand networking, for example, to look into, well, is there an alternative to using TCP? Maybe taking a look at UDP. Right? Or Google's QCIP protocol. These are new protocols that can speed up things in the decentralized world. What is there? How about leveraging IoT and edge devices, right? For example, Netflix, right? If you guys know Netflix, it's a streaming service. They actually is proof that decentralization is faster than cloud and centralized cloud computing. Here's why. For instance, if you had a big video stored on a server somewhere in Amazon, everyone in the world want to stream that video. They'll call that server. That's slow. If you're far away, it's going to take very slow time. But what if that same exact file is split up in different pieces, in different chunks? It's stored on maybe TV set boxes, edge devices, that's close to where the user is, right?
In case of Amazon, you actually connect to the server which is closest to you.
Right. So in a way, that's decentralization, right? But see, I think that definitions of what exactly is decentralization. It needs to be refined in a technology world. It does not necessarily always mean peer-to-peer, all right? Decentralization already exists in a legacy technological world. Sometimes it's not worth to reinvent certain architecture on what works. So until, I guess, from a legal point of view, banking point of view, right? Even payment point of view. Let's say you can build all these services, but for me to convert a coin into a dollar, I mean, it's the most painful thing, and I know Yasen knows, we talk about this all the time, right? I can pay in Bitcoin, but I can't pay in Ethereum because of KYC services, right? Yasen's company, PaySafe, would love to have Ethereum, accept Ethereum, but they can't because all the regulatory says no. If they don't listen, they'll get shut down. So it's hard to get mass adoption if these things, are there. So I guess, technology, having real technologists solve all the small intricacies of infrastructure for basic things such as payment, file storage. Until these basic things are done, then there is a foundation for all these DApps or whatever else that can be built on top of it.
Okay, moving on for the next questions. 2017, we saw huge hype around ICOs. 2018, let's say there is still hype from the founders' side, less from the retail investors. I mean, they were affected from what is happening in the market. What do you think about ICOs? Did they affect the market in a good way or in a bad way? Did they do any good to the market so far?
If I were to choose one answer, I would say good, even though I know a lot of people get hurt. I believe that in order to have innovation, you got to go through all this wild, wild west. I remember when the internet first got started, there was, in a dot-com boom, there was about hundreds of thousands of tech startups that wanted to be at next.com. And out of those today, probably less than 2,000 are still around. But what do we get from there? We got faster internet speeds. We got new ways of having cloud-based computing. it completely evolved from that point forward. I think the blockchain world will be similar. You have to go through all this craziness in the wild, wild west. I mean, I guess it was wild, wild west on steroids. Now it's just wild, wild west, right? Kind of toned down a little bit. But it's part of the process in developing maturity with the new emerging technology.
So for me, ICOs actually enabled customers to do something which was not possible before, which is always a good thing, because if you think about it, it was super hard to invest in anything if you're not an accredited investor, if you're not an investment business yourself. It was super, super tough. So ICOs actually changed that, which is my understanding of why it's a good thing. Of course, there will be consequences when most of those fail, but that's the world of investment, right? If you go, for example, Denis has been a VC. You know, what's the rate of the failed startups which are not in crypto? It's probably like 99%, right? So it's pretty much the same. It's not different. It's just that people need to realize that, and you need to live through that in order for this to evolve. Another point of view is that ICOs for me is pretty much the same how Bitcoin evolved back from 2011 till now. So for example, you had, how many of you actually had issues with empty GOX?
With what?
With empty GOX.
The exchange.
Mount Gox.
All right, okay, so we've lost a lot of money with empty GOX actually, and that's pretty much the same thing happening. People were like, Bitcoin is dead, you know, empty GOX failed, it's just an exchange, there will be 10 more, right? So now we have Coinbase, we have Bitstamp, probably even some of them may fail, and then we will have another one. And I think that's basically the natural way of things to evolve. So yeah, from that perspective, I think ICOs just circle the same way as what happened into the crypto industry in the past 5 or 6 years.
By the way, to touch on my last point, several years ago, when I first came across Bitcoin and wanted to buy, which I didn't, I have to mention this, but I ended up at Mt. Gox, and the user interface looked so scammy that I didn't buy Bitcoins because of this. I thought my credit card details, they're gone. That's why. And it really hurts now, obviously.
Yeah, some people see a lot of things, then when they see a scam, they just recognize it.
But in my view, all the ICOs who successfully raised millions of dollars, they should actually thank Bitcoin. Because the only reason they raised the money is because everybody got rich and they wanted to get the same returns they were able to achieve with Bitcoin. So they bought Ether to invest in ICOs, and they invested in everything, and they didn't understand it, but they invested in it. And currently, basically, in my view, the market cooling down is actually a good thing, because nowadays, if you're doing an ICO, you need to have LOIs in place, letter of intents. You need to have a large community. You need to have a very strong team. You need to have better contracts, better protection of the investors, and so on and so forth. So I think this is a good thing. I also think that what it showed us is that it works. So now we know actually it works. You can raise funds. That's good.
Now it's the time to learn how to do it.
Now it's the time to build cool and good and useful applications.
I'm always the last one in the row, so...
Your mic is off, I think.
Always the last one, and I think I can agree to everything, and Denis, basically how you presented it. It was funny for me in St. Moritz. We had kind of self-made millionaires who started to invest with like 20, 30K back in years, and were like felt 30, 40 times millionaires on stage, and they were talking about the new age. And if you see them now at conferences, they use very different terms, which if you maybe can cut out of the recording, but now they talk about shitcoin schemes, about pump and dump, so where you judge on the ICO issue is probably before you give an opinion, you tell me before where you are in your own investment cycle. But I fully agree, this is part of the experiment. I mean, it's an entirely new mechanism that we are experimenting with. We know it works, but we need to learn. So there we are.
I would like to add, if there were no ICOs, none of us would be here.
None of us would be here, actually.
Actually, no Bitcoin, Ethereum, okay, 99.9% of us wouldn't be here, all right? So because of it, it has triggered dialogues amongst people. And that's pretty much, I think, what the founders of some of these coins want to do, right? Want to start talking about different things, challenging the status quo, disrupting the large companies, right? The Google, the Alibabas, and Tencents, they used to have control of all your data.
Yep.
Right? Because of these discussions, people are talking about give ownership back to the individual, incentivize the individual, simplify the economy, make it more efficient. I bet a lot of these intellectual thought talks wouldn't have happened without ICO. So I definitely think that was a success.
Sounds great. Any questions from the audience? Anyone would like to ask our panelists? No? Okay, then I will do that. The next topic, which we already started touching throughout the discussion, is STO's security tokens offering. What are the challenges that are currently stopping it from actually going live or evolving? There's a lot of, big partnerships between exchanges and governments in Malta, also, in other jurisdictions to build security token exchanges. Still, I haven't seen any big STO going live or any big companies. So, what's your input on that?
Yeah, if you would have me had on stage like at the beginning of the year, I would have been like make the biggest speech for STOs, because I believe that was the key innovation that is really sustainable. Now I've worked on it. It's difficult yet, but I think we can all work together. But before we all start to get euphoric again. I'd like to, some of you are VCs, and one of the key questions is, do VCs, if we think about early stage financing, I mean, do VCs really want the equity to be public, to be liquid? So if you take your company public in a way, through an STO, you should think about, will you be able to get a qualified VC later on for the A, B, or C round? And will this VC be prepared for a more or less liquid asset? I believe the business model of the VCs, but please argue differently. The business model of VCs very much is a kind of, you collect money from the investor, you tell them everything is going to be fine for them. You give them some reports on paper on accrued value, and after 7-9 years, you start to pay it back, and you don't want any liquidity. For example, I'm invested in Spotify, which obviously is a nice stock, but the VCs actually who are invested, they are not happy that Spotify now is public, much to my astonishment. And if you're a CEO of a company that you think to take public very early, you must also think about the fact that once you have the token liquid, you need to spend time with your investors. They will ask questions. So if I have two companies, one that I know the CEO is fully focused on business and developing the technology and the customer, and the other where I know the CEO of the startup company still has to take 30-40% of his time really talking to the investors. For the early startups, growth company, I tend to invest to those companies where I know the CEO is going to be fully, exclusively focusing on the business, which is difficult enough. Will we see some progress? I believe, yeah, we will see tokenization of assets. That's going to be fascinating. But I don't see it as fast. It takes also here 2, 3, 4 years.
Okay. From my side, to answer your question, I would say yes. I expect a handful of regulated exchanges to be launched within the first 6 months of 2019. But I also want to mention here something really important for investors again, because you need really to differentiate between a security token and tokenized equity. If you're ever offered to invest in a security token, read the documents, be aware in many situations you do have, rights for certain revenue streams or earnings but you have no voting rights. Now, what does this mean? Imagine there is a company here in Sofia, let's call it the Alpha company, and it has equity, it's owned by 5 people. So these 5 people, they say, hey, we have a great idea, let's do an STO. Now, they're basically selling these security tokens, and we're all investing. So if the company then is doing well, or is doing bad, let's say if it's doing bad, the tokens are worth nothing, right? Because you only have the rights to 10% of the revenues or earnings. Now, if the company is doing very well, there might come another company from Bulgaria or wherever, and they might acquire the company behind the foundation or whatever that did the STO. So what are your rights? What will happen? You need to be very careful. Also, if this company is doing well because it has amazing patents, amazing technology, and it decides to do an IPO, what happens to your security tokens? I think this is a big question, and never always differentiate between security tokens and tokenized equity.
So for the STOs, I would really love to see how all those guys from the technical industry start working with legal, regulatory, and other people from this environment, because I think that will be crucial for finally having this like mutual conversation in the industry. Because currently it was like we try to be as far as we can from the regulatory perspective. Like we don't want to deal with SEC, for example, in the States. We don't want to deal with FCA here in the EU and UK. But at the same time, in order, as one of the previous questions, in order for mass adoption to happen, you need to start dealing with those. So I think STOs will at least make another step into this direction by at least forming a token which has been kind of like legal enough or like compliant enough for some specific area in the world.
I have a feeling STOs are going to be the next ICO bubble.
Well, yeah, that might be the case, because, you know, you can just rename it like whatever you want. Now I give you an utility, and tomorrow I give you a part of the company, which, as Massimo said, could be worth nothing. But still, for the successful ones, they will definitely succeed in finding the language with the regulatory and legal.
But that, I believe, that bubble will be more for the wealthy and the credit investors in certain countries to participate, instead of anyone can participate in my opinion. But going back to a question, what I see about security tokens, how things are going. I mean, it's inevitable security tokens will be mass adopted. It's inevitable there will be more and more security token exchanges. As Yasen said, the question is, will technology catch up to solve some of these issues? Right? A very interesting project I heard that some of these companies are doing to be compliant is they're looking into putting wrappers around utility tokens that in a way can turn utility tokens into more security tokens, and they can even have traceability in where the token is going and link it to KYC identification, right? These type of projects are pretty much funded and endorsed, supported by a lot of these government regulatories, right? But one question I like to ask everyone here is, are you ready to handle if utility tokens, I mean, I assume some of you here are crypto investors, right? Maybe you're a personal investor, angel investor. So what if utility tokens are required, all of it, to be the same value, no matter if it's seed round, pre-sale, public sale? There's regulation that does not let utility tokens have difference in values, because the purpose of utilities have utility, not to make money off of it, right? If you want to go with by the book definition. And of course, no one's doing that right now, or not many. So what will the investment community like that? So if, let's say, that is enforced by regulation months ahead, then I don't think anybody will see any value in utility tokens anymore, and they will do security token plays, because then they can have valuations, they can have assets. I make sure it's protected and free of risk from legal uncertainties, right? So I think that in terms of security tokens, so on one side you have the legal field needs to catch up and also have the technology catch up to make it work. But the upcoming, I would say, in terms of regulation, the biggest challenge right now to accelerating security tokens is the fragmentation of the legal side, right? So for example, the US, the laws are different than Singapore, it's different than Malta, and there's different interpretations.
You cannot sell the same securities.
You can't say it's a security token, universal security token, when it's a security token with one law, it's not the other law. So I believe this upcoming November G20 summit will be huge, and all of us need to pay attention to it. I believe it's in Buenos Aires, in Argentina. This cryptocurrency and security tokens will be a major topic in G20, this upcoming Q4, and they will be discussing what I believe after that meeting, the governments are going to, reach some sort of consensus in a general direction, especially amongst the G8 or G20, and that's going to dictate the direction of regulation. So, this, I believe, will kick off new regulations and things in Q1, Q2 next year, which could even be related to, say, having the ETF able to get passed for Bitcoin. Maybe kick off a crypto bull run again. The bull market, the crypto market will recover by then. But all of that is right now on hold. Uncertainty is everywhere until these countries figure out how exactly coordinate this effort to deal with the securitization tokens. I mean, after all, for a lot of folks that come into this crypto community, that does not come from a finance background, a Wall Street background, or a VC background, it's very expensive and complicated to start your own company and have an IPO to get listed on a global stock exchange, say New York Stock Exchange, NASDAQ, etc., right? You have to literally be a transparent book. Everything is scrutinized, every number. You can't fudge numbers, right? Right now, how many of us, if we invest, really even know who or what we're investing in? There's no public information for that. There could be a shell companies after shell companies hiding things. So these are challenges that I think needs to be, dealt with before security tokens will even work.
So a lot of clarity is needed. Any comments? No? Okay, in the previous panel, or I think as well on the speech from Bitcoin Cash, they were also discussing about stablecoins. Currently, it's the new trend in the market. A lot of stablecoins are popping up everywhere. And I would like to ask our panelists, what do you think about stablecoins? Are they actually needed in the industry at this stage? Are you basically, as part of the funds that you're running, are you using any stablecoins, or are you looking to integrate any stablecoins in the future inside of your platforms or inside of your investments portfolio?
Let me ask you back, what do you define as a stablecoin? Is a stablecoin
it's not a stablecoin, it's a stablecoin backed by some assets.
Exactly, because I mean, is Tether really a stablecoin? I mean, I put all my trust in the US economy, right? It's the same thing I do with a stablecoin which is backed by the Swiss franc or by a basket of currencies. I've seen a list of, I think, 15 current projects working on a stablecoin. I think personally, yes, they're very convenient if you are, for example, an investment firm like we are, just to hedge. And I also agree with with the keynote speaker, that in the very, very long run, the only real stablecoin we might see might be Bitcoin.
Maybe. We don't know. Pascal?
I can't add much to that. I think it's something to experiment with. It's a bit of a fight between Wall Street and the financial community, and we'll see. I mean, I can see that incentivizing it's part of the blockchain to have a stable coin, and I see a lot of innovation going on. I see Wall Street companies working on it. I see excellent investors coming up with solutions. But I don't have my opinion made up, and I'm not involved in the project that I do work with stablecoins at the moment.
And what do you think if the reserve ratio of such a stablecoin is not 100%, and such a project would become very, very, very big? What would the government do? Because basically there is a private competitor. Right?
Of course, this is one of the basically main concerns for the industry. USDT have a huge problem with that. They did only one audit, which was done by a law firm, not an auditing firm. They said, we have the money, but we cannot show you the bank accounts. So people are holding USDT without actually knowing if their money exists or doesn't exist. So the moment USDT will disappear, or they'll say, hey, sorry, we don't have the money for you, that's going to affect the whole market.
I personally don't think that stablecoins as a replacement for fiat will reach mass adoption anytime soon, simply because I don't think governments will allow that to happen, especially when it becomes a competitor, a solid competitor to fiat. Central banks and governments right now are not allowing that to happen. But we will see. G20 will be very interesting. But a signal to my sentiment has to come from, I believe I read in the news recently, the IMF, or International Monetary Foundation, they loan out money to a lot of third world or developing countries. I read where if there's a country they're trying to loan money to was actively trying to develop a national cryptocurrency because their fiat currency, their fiat is in ruins. IMF was saying, if you do that, we won't loan you any money. So the powers that be are using their leverage of the fiat world to restrict even certain smaller governments from trying to experiment with a national cryptocurrency, which could be a stable coin.
Well, centralized world is fighting the decentralized world.
Right. So that's just a signal to me where I feel it's going to be difficult for a stable coin that's pegged to fiat to really work out on the mass market. However, I do see that the stable coins that will work in the short term are more of the ones pegged to commodity. I forgot which company, but I believe there was one where stable coins pegged to gold, for instance, and they have very well checks and balances for that. It's a Singapore-based company. I see success in those simply because it's already working, and it does make sense when a resource is an object, is an established asset right now. I would see also stable coins backed by illiquid assets such as real estate. Those things will take precedent and will grow first before the ones that deal with fiscal monetary policy. That's just my opinion.
Yasin, so are you going to integrate some stable coins?
We're actually thinking about it. But first, my view on the stablecoin madness, I guess, if I can call it like that. So if you think about it, like it's just the natural thing to happen because all those crypto businesses experience the issue to integrate proper fiat payment systems and to find partnerships into the regular fiat industry. So what do? They just go, they create a stable coin, a crypto coin, which is pegged to the specific fiat. Or there's a company which build this and start selling this dream to them, and they start using it instead of finding the way to properly integrate fiat payment methods from a deposit perspectives. So as Denis said, I mean, it's a short-term thing. I mean, it's just solving a problem which is current. And will probably be there because if you think about it, we have this lovely monetary system, right? And we've been working all over it for a couple of 100 years. And like in a couple of tens of years, we've been digitalizing everything. And now it takes 3 days for me to send money to you. Wow, that's super innovative, right? So we either need to try to fix our current system to move money fast, and that will be how stable coins ends. They'll just provide technology for fiat currencies to start the transfer faster. Because that's really the issue currently, if you think about it. Like sending money from a point A to point B, it takes forever. Like sending money to a cryptocurrency exchange takes forever. And stablecoins try to fix that.
Yep, and the fees are high.
Yeah.
Any questions from the audience?
I should also add, I think, everything else I mentioned, KYCs, those are very important because now with stable coins, you can have people building derivatives on it and things can be manipulated. Exchange currencies have been manipulated already. People will find ways to do all that to hurt the uneducated presumer. So until regulatory, KYC, those things are addressed, I think stablecoins will have a lot of resistance to really grow.
Okay. How much time we still have? Anyone? No? Okay, so one more question. There's a lot of buzz about the Bitcoin ETF. A lot of people think that when it's going to be approved, the bull market is going to start. Minority think it's not going to affect the market. What do you guys think?
I think ETF is inevitable. There's a lot of demand. I think it'll likely pass in Q1 or Q2, coincidentally after the G20 summit. The reason why it hasn't passed this year, I believe, has a lot to do with, as much as people argue there could be measures in place to prevent manipulation of prices, there is manipulation. Proof of that is, let's take a look at BitMEX. I don't know if you guys are familiar with that exchange. BitMEX is one of the largest Bitcoin exchange that allows people to do leverage to long or short Bitcoin, 10x, 100x leverage. That means they will let you borrow a bunch of money to put in a long or short position. If you look at the news recently, BitMEX has crazy spikes that liquidate a lot of users. BitMEX is under maintenance for literally a few hours, and you have Bitcoin or Ethereum spiking like a whole $100, right? And these type of things, you know, are absolutely detrimental to lay people when they put their savings and into institutional accounts that then invest it into funds that are built up Bitcoin and Ethereum. It could literally hurt a lot of regular retail investors. So until there's a lot more liquidity in the market and there's a lot of regulations in place and regulations for exchanges, I don't think ETFs will pass. But I do foresee the G20 bring up new regulations, which will be affected maybe sometime next year, and therefore it could set a precedent for making it passable.
Yeah, so basically same as Denis mentioned, this is an inevitable. I mean, it will happen probably. I also do believe that it might not be happening yet because of either the manipulations or because of the maturity of the entire ecosystem. Probably in the next 6 months, we hear that BlackRock is going to consider partnering with Coinbase to launch an ETF. We'll probably have a bunch of several new tries. So that will happen. Either that, I'm not really sure that this will trigger a bull run or it will be a factor for the market. However, it will definitely, it's inevitable, and we're just waiting for it. See.
Just 3 words: self-fulfilling prophecy. I think that many retail investors will get very excited once an ETF is approved, and they will invest more, and then market sentiment might change, and then there is this product, and institutions see this, and they might invest as well, and more products are being launched, and more investors come in. So I think, yes, it could trigger, or it could at least, you know, change the market, the current market sentiment, and the market is still driven by market sentiment and momentum. I mean, I did an analysis where I tried to look at equity investment strategies in the crypto space, and it was really funny to actually see that if you would have invested just based on momentum, like the past 7 days returns, weekly rebalanced, you would have outperformed pretty much anything. It's pretty
2017, you just need to throw $100 on something, and you end up getting money after 1 month, 2 weeks, 3 weeks. You don't need to analyze anything. Just throw the money and wait, and get out. But, you know, not everyone is able to do that.
Well, Denis, I think you definitely pointed out to some of the critical issues that we see with Bitcoin, and once they are resolved, I think the market is waiting for it, the market is preparing. I mean, that is something I clearly, absolutely see with our crypto fund and crypto finance group. The banks and all the banks and all the financial intermediaries ask for something in the space. They are preparing. We're working on storage. We're working on custody. It's all not easy, but once we basically have the tools ready, and we have the regulations and we have the market liquidity, I absolutely expect that that we're going to see another boom in Bitcoin.
Last more question. Bitcoin, end of 2019. What's the price?
And 225?
You can try 225.
50K.
I'm not going to make a prediction.
Oh, come on.
You can only be a fool.
Anywhere between 0 and 100,000? No.
Oh my God. That's very harsh. 0.
So for the price, I'm not sure I can make a prediction, or I can give you another prediction. It is the trading volume which will happen in 2025, and I'm pretty sure it will exceed 100 bill a day, especially if ETFs start plunging one after another. So yeah. But yeah, the price will be either, I don't know, probably 25, 30K, or something like this.
I'll put a guess. I would say the market cap will be at least 1 trillion at that time, and then our Christmas will be around, I would say, 30 to 50K.
Wow, nice, interesting. Pascal, you wanted to add something?
Ethereum will be 2,000.
Oh my, 2,000 only?
With the ETF, it's more rest in peace Ethereum. It's just there's going to be a lot more attention over to Bitcoin until Ethereum shapes up with its sharding or plasma protocols, which we'll see.
Sounds good. Any more questions? Holy shit.
Microphone or?
It's on the way. Very optimistic panel. Everyone believes that the market will grow. I like that.
Hi guys, thanks for the interesting talk. The next financial crisis, when it comes, so not crypto, like the big financial crisis, whenever that happens. When it does happen, it will be the first time in, let's say, the last 100 years there's been a new asset class, which is crypto. What do you think happens? Does money flow into crypto? Or does money flow out? Or what's your general take on the new asset class that will be available when this next financial bubble bursts?
I'm happy to take that one. I once compared what happened to the commodity market after the dot-com bubble burst, which is really interesting because, I mean, investors who invest in commodities like oil, they don't use it, right? So they were looking for alternative investment opportunities and they started to invest in oil. So what happened is there were more and more products to invest in commodities as oil, and there was a massive run. Prices exploded. So I'm not predicting that this is going to happen, but it might be, could happen. People looking for a hedge to kind of diversify their portfolios. So we'll see.
I think the answer is the answer to the question, how fast people will be able to pull. Because if there is a crisis, I mean, people are losing money. So I don't see how money is going to be moving massively into the crypto assets. Because there's a crisis, people might end up, whatever they have or whatever they own equals 0. So they cannot move any money into the crypto assets unless there is a smart people who will start moving into before the crisis is going to happen.
That's true.
And that's a very small percentage of people who are actually able to see it happening. Again, I couldn't hear you. Can you have a microphone, please?
It's a good point, but the market cap is so small, you only need a few of these guys up here to start to move in before the price really starts to go. And when it does, everything else is going down. People see things going up. I mean, it's natural for them to follow that price action.
Yeah, I've been on the investment committee of a large Swiss pension fund for managing basically two crises, and the answer is easy. If there's a crisis, everything that's liquid, people will liquidate it and basically seek safety. And the illiquid assets, and kind of the AAA rated, they give you the real diversification. We try to diversify in all different kind of classes. It works to some extent, but in the end, the short answer is if there's liquidity and Bitcoin is liquid, I would not bet it for you to really diversify your portfolio.
Yeah. I mean, if you look at the recent monetary crises in certain countries like Turkey, Venezuela, a lot of these individuals basically were selling their bolivars and also selling the Turkish lira, and they were going into Bitcoin, right? And that's what propped up Bitcoin when Ethereum was tanking. Otherwise, I think Bitcoin would be under 6,000 already. But at the same time, I also will look at fiscal policies and regulations. In certain countries like China, they're more restrictive on it. They might have a lot of laws where it's really hard to purchase cryptocurrencies. Iran as well, I remember in the news, people were selling it on the black market because you can't get it on any exchange there. People are buying Bitcoin as high as 20,000 to 24,000 US dollar per coin when it's only worth less than 7,000. And so I would say, you know, we have to take a look at how the regulations are like in the country for an exchange. But if there is no regulation and these people have an easy way to access a crypto exchange, then I would say Bitcoin will be king and win, and Ethereum, because it's now seen as a store of value, that's proven by the recent series of events, whereas Ethereum is not. And it doesn't help when all the ICOs panic and they sell everything to dump it so they can save their companies from sinking. It just suppresses the market.
Too late to dump it. Already gained the losses.
It's still going to keep going down, in my opinion.
Yeah. Okay, I think we're going to wrap up. Any more questions? Do we still have time? Yes? Okay.
You want to do a fun one?
No, there was a question that you asked before we went up. It's the decentralized versus centralized.
Yeah, so we want to do something. Everyone's asking us questions. Why don't we do something really fun? Centralization versus decentralization. If you believe everything should be decentralized, then put your thumb up. Basically, decentralization is good. If you believe decentralization is bad and everything should be centralized, thumbs down. If you think it's partial, then halfway.
For me?
Should we?
I'm already
One, two,
halfway.
three. Right.
So there is basically a huge discussion of should a product be 100% decentralized or should it be centralized? In some cases, products actually cannot be built as decentralized. They won't be efficient.
Yes.
In other cases, you can build it semi-decentralized and centralized. But then you have those that troll you and tell you, there's no such thing, you know, semi-centralized and decentralized.
Correct.
Because if it's semi, it means it's already centralized. Because if you already hold or basically control a small part, you can affect the whole product. So it's centralized. There is no semi. How do you basically answer to this?
I'm happy to start. So, how should I put this? I believe that majority of use cases for full decentralization will fail for one simple reason, and that's human nature. Not getting in a political debate here for governance, socialism, democracy, all that kind of thing.
But that means Ethereum will fail also, no?
Well, it's whenever you have a power vacuum, whoever has power will tend to want to control and set rules to exclude themselves from the bad things, right? So the law of strong federations dictate that there's always going to be centralization in some form. And it's all that human nature is always going to hinder the ideal utopia of full decentralization. However, I believe that having a push towards decentralization, and then it's like we shoot for the stars, but we hit the moon, we don't get to the stars, is still a good thing, and we'll end up somewhere being in the middle. And as a testament to that, if you take a look at which consensus models have received more adoption on the enterprise side of things, Ethereum did not really receive a lot of enterprise adoption. However, if you take a look at Stellar's consensus mechanism of federated Bayesian algorithm, which simply says if you're an app developer, for example, you get to choose what nodes you trust, right? So if you're enterprise, you dictate which service providers you trust. That's getting traction. And that's, in a way, I believe, a hybrid between centralization and decentralization. It gives choice, but yet it's somewhat decentralized. I think that's the first step. And then after that, it really depends on politics and how things evolve. But I think, it'll gradually go towards decentralization. But until we can have universal stablecoins, universal monetary policies, and have a world where governments can work together, smoothly, it'll still be a hybrid some shape or form, because in any sense, everyone, and especially business owners, want to protect their own interests, enterprise want to protect their own interests, and they need to have some form of control. So it's definitely going to be a long-term work in progress.
So on an application level, decentralization actually have a very few cases which would work. And that's, as Denis mentioned, pretty much because of what we kind of got used to. And that is a very, very good customer experience, very fast operational applications. And the decentralization in a variety of ways actually cannot be done like that. I mean, you cannot have a decentralized, like a fully decentralized app, and an app which can run stuff in microseconds. Like if you think about decentralized exchanges, you cannot do trades in a matter of 30 or 50 milliseconds, microseconds, etc. So I think the problem here is that there are certain cases which will be very, very good for decentralization, and there are very few for now, and yeah. And then that's the obvious reason why we have Google, Amazon, and all those guys here.
Okay.
Look, I feel it really depends from case to case. I often feel like full decentralization is a solution looking for a problem. I see many companies, projects, and I ask myself, why does it need to be fully decentralized? So I think it's not a yes and no question. Both have advantages and disadvantages.
If I may, I want to add how many of you know Dash, right? Pretty successful coin, right? I mean, they recently, from what I understand, when I was in San Francisco recently, I talked to one of the advisors for Dash. They were suggesting to me there's a lot of growing pains in the Dash coin, Dash community. When things are small and you don't have a large tribe or you have very small network, decisions are made easily for governance of that token. But when networks start going huge, and what ended up happening is that the power of decision ended up in the hand of a group of people that were, let's say, early adopters, but didn't necessarily have the know-how or understand to make proper decisions for the good of that network. Quote unquote, they're run by a bunch of amateurs. It ended up really, questioning and hindering the potential future growth and scaling of that community. So case in point is, I think that growing a network and the governance protocol, it actually varies depending on the size of that network. You might have a consensus model that works with a small tribe. It's like if all of us were on an island, I don't know, 50 of us, maybe it's easy for us to pick straws and do votes, because whatever decisions we make affects all of us. But if you're trying to use the same mechanism and run it with 50 million people in a country like, say, China, or a huge network,
It's going to be impossible.
It's going to be impossible, because not every issue you're voting on has relevance to everyone, right? So I think that it's a social experiment right now with game theory and all this kind of stuff, and that's why there needs to be a lot more professional, expert academics and scientists, data scientists, that basically run financial models on all of these things, and these things are actually happening.
I think
that's a good thing.
No doubt there's a lot of still professional people who still didn't enter the market.
And that too. So we need more of those thought thinkers to see all possible scenarios and see what happens. But I feel that in the future, the optimal governance model will be a dynamic one that's not black or white, zero static. It will adjust based on the growth of the network, and it will vary. But that's just my sentiment.
Thank you. Thank you, everyone.